It's Romulus here. Let's try a different song, huh? What about this one?
Same time next week.
Oh, we got an ad. Hold on. It'll blow through it. Give it a minute. Give it a minute.
If you're still trying to figure out how to start an online business or how to get
Oh,
people to actually buy from you over the internet, I have some really good news for you that I think you're going to find really encouraging.
There we go. Let's try that. All right, go with that for a second, everybody. Well, okay, that's right. This is your old buddy Romulus, and happy St. Patrick's Day, everybody. In addition to being an ancient Roman from 2,700 years ago, I'm also an Irishman. That's right. That's the family blood, at least way, way back. Old Liam. That's right, old Liam. The ancestors of old Liam, my ancestors, he jumped on a boat from Ireland in September of 1912, sailed over to Liverpool, England, and then jumped on a bigger boat and came to New York. And if any of you are paying attention to the dates on that, you may have caught on with the idea that, Romulus, that was only a couple of months after that great big ship sailed from Liverpool heading to New York and didn't quite make it. Decided to have a run-in with a bit of an ice ship in the ocean. That's right. I guess the old great grandpappy survived by picking a different boat by just a few months. Well, tonight we have a very special event, everybody. This is Thursday Night Live. You cannot find a better way to spend an hour on Thursday, well, at least professionally speaking, than with us here in Club Romulus. And we have a very, very special guest with us tonight, everybody. Troy Noonan from Backpack Trader, who, by the way, before we go any further, I want to extend my deep felt personal gratitude and thanks for Troy's willingness to let me into his fold, to come with him on his journey. And he's also allowing the rest of us to come along as well. There are only a few people, a handful of people, still working in the professional landscape of Wall Street, everybody, that has more experience than me. And one of them happens to be Troy. I wonder how he did that by actually being younger than me. A nice little trick. So Troy and I are going to have a conversation tonight, a little bit of an interview, talk about markets and ideas that we always are interested in helping you guys get better, become traders and investors. And we will get to that. Of course, we'll cover briefly some of our own topics that we talk about on Thursdays, which is the indexes, sectors, groups, individual stocks, and any questions. But without further ado, I'm going to unmute Troy. If I can find him on the list in here. I know he's here somewhere. There we go. And Troy, there we are. And
testing. You can probably hear my gardener outside.
Absolutely. Well, we don't hear the gardener quite yet, but we definitely hear you. So thank you for joining us. So as I mentioned to everybody, we do also have tonight with us, in addition to the regular Centurions that have been around the group for some time, we have some new people that have come along with Troy. So we will give them, on behalf of all the Romulus Centurion Legion, a heartfelt welcome. And to you, Troy. So as I mentioned, Troy's been at this for a little bit longer than me. He specializes in Forex, that's currency trading, futures trading, commodities trading, has just some excellent product launches that he's gone through during his career. So Troy, why don't you just give us a little bit of a background before we go any further on how you got started in this business. The story's fascinating for those who haven't read it, and I'm sure there was a few. So why don't you just tell us a little bit about how you started way back when?
Yeah, sure. Okay, let me see if I can remember that far. back in the early 90s, another world ago, I received a brochure in the mail, and it talked about Head and Shoulders. And at first I thought that, it's not the best shampoo in the world, but as it turned out, it was a pattern, and I learned it really quickly. It's pretty easy one to spot. And I unwittingly took a trade, one of my earlier trades. I shorted the British pound against the dollar, and that was right during the time when our good old friend George Soros was in the process of breaking the Bank of England. He was shorting the pound against the Deutschmark and other currencies, and I happened to just grab it at that same time. I took my several grand and backpacked my way through Europe for the next several months.
And if I have it right, that is you right there with a backpack on your shoulders.
It was a bigger one than that. It was as big as a house, actually, but weighed about as much as a house. Anyway, Soros made billions. I picked up a set of bongos, and being a drummer, started sitting in with musicians all throughout Europe. And I met a Venezuelan musician on Ponte Vecchio in Florence, and we used to go in and play for all the bars for free beer. We'd entertain the guests, and we traveled around Italy doing that. It was pretty amazing. And when I went to visit him the following year in Caracas, Venezuela, within 24 hours, I ended up meeting the woman that I've now been married to for 27 years. And lo and behold, would you believe today is actually her birthday? Whoa. So there you go. That's my story.
Happy birthday, Mrs. Backpacker.
Yeah. So that was before the day of cell phones, and even before the day of the internet. When the internet cafes started popping up around Europe in the late 90s, I backpacked again through Europe, jumping in and out of the cafes all around Europe, logging in to the internet, placing trades, moving from one town to the next. And that's really when the backpack trader was born, or at least grew some legs. So that's how it kind of happened. Years later, I received a phone call from one of the earlier education firms about trading online called NetPicks. A lot of you might have heard of them over the years. And I was a customer of theirs, and they heard me interacting with some of their other members on one of their forums. And just out of the blue, one of the owners unexpectedly called me. And after a short conversation, he asked me if I wanted to join their team as their very first trading coach. And I accepted, with the condition that I could start calling a live trade room for them, which I started about 30 days after. And that was, I don't know, I lost count, 18 years ago, 19 years ago. So about 4 years ago in 2018, I finally left them. I had spun off my own business now, as you can see, the Backpack Trader. But when I was with them, all that experience in the trade room every day and the pressures involved with that, and Romulus, you could attest to what that is, enabled me to create some of my own strategies. And turned out I had a pretty good knack for it. And I ended up making some of their all-time most effective and best-selling strategies over the years. Now we got thousands of members in over 130 countries. And when I left NetPicks, I was able to take all my stuff. So I got all my strategies now, and I got new ones since then. And always pushing the envelope, trying to get better, trying to find new ways to extract the treasure from the market while hanging on to the treasure that's been extracted. And therein lies the trick, right? It's not giving the money back.
And that's a common mistake. Someone might say to us, well, I made 50%. Okay, but in the last 2 months, how much of that did you lose? So
yeah. Sure. I mean, we all go through losing trades and losing sessions, but winning means growing your account. And we know that there's a random distribution of wins and losses. No matter how good your strategy is, there's going to be some trades that lose. This isn't 100% thing. All we could do is hope to put the odds on our side and then put on smart money management so that we can withstand the trades that aren't going to work out. It's okay to get kicked in the shins as long as we don't lose our legs.
Well, you sound like me when I'm doing my writing to my people on a daily basis, just repeating those lessons again and again. It's so valuable. And so you go short the British pound to get things started. The backpacking kicks off there, hired as a trading coach. And then I guess over those in that period of time or along the way, you really became fascinated and dug deeply into the Forex and the commodities as opposed to the million other things that we can trade in. And how and why was that particular area of expertise so drawn to you?
Well, I like the idea of getting my trading done quickly. And so day trading gave me that. And the best way to day trade is with futures, because you push a button, you're in, you push a button, you're out. It's really simple, low cost, and you get filled. And anyway, it just happened that way. I mean, I went through some hard knocks, of course. My early years, I was using a discount broker. You guys remember Lynn Waldock, for example?
Well, yeah, I remember seeing those ads all over the place.
Yeah. So I had a discount broker, and I made like 12 grand trading crude oil futures in 3 weeks, and then in one day lost it all. And that's what taught me a pretty serious lesson. It was probably the best trade I ever made, was losing that money, because it taught me I never want to experience that again. And so when the curtains opened up and I had to call a live trade for the first time ever, everyone knows how scary it is to go out on stage and sing in front of people, unless you're born to be a singer. Most people would rather walk the plank and jump off a cliff than sing in front of people, right? And that's probably why I became a drummer. When the trade room opened up, it was just as frightening. But then I had those 4 magic words that just kind of quietly were repeating themselves in the back of my mind. And it was this idea. Well, it wasn't an idea. There were 4 specific words: lean on the system. And I'm like, that's pretty good advice, because if I lean on the system, I don't try to be a hero. Whether it wins or loses, I'm just being professional doing my job, and it won't be my fault. Really, that's what I was thinking at the time. But it saved me, because I learned that the system knows more than you. And there's a reason why it's a winning trade plan. There's a reason why it's a strategy that wins. If not, I wouldn't be using it in the trade room. It wasn't my strategy. It was one of NetPick's strategies.
Sure.
But I learned a lot of lessons from that. And being in the trade room, I didn't want to sit in front of the computers all day long. So I needed something that I can get done quickly. And one of the early concepts that we adopted was, it's in my 12 Powers ebook, actually. It's called The Power of Quitting. And the power of quitting says that you have your trade plan, you hit your goals, and that empowers you to quit trading for the day. Run it like a business, come back tomorrow, do it again. And as long as you're winning more than you lose, and you could prove that to yourself before you even start risking your money, then you've got a winning formula. You've got a way to make money as a trader. And so for me, to answer your question, day trading accomplished that. Forex was a way to put on some slower trades, although Forex is good for day trading too, not nearly as good, in my opinion, as futures. But for swing trading, it's great. It's super easy. Takes a few minutes a week, and that fits within my backpack trader style.
Yeah.
By the way, backpack trader doesn't mean you have to schlep a backpack all over the place.
Oh, wait, I thought it did. I thought that was the mandatory entry to the club.
No, that's just what happened. That's what started me off, was the adventure through Europe and South America with a backpack. But really, it's symbolic to whatever your version of backpack trader. It's the freedom you get from successfully trading. That's the key. And if you keep your eye focused on the big picture and why you're trading in the first place, to achieve a high level of freedom, so that you can wake up when you're done sleeping, you could fire your boss and pretty much call your own shots in life. Whether you want to trade from your own sofa, the Orient Express, anywhere in between, you're empowered to do that. And that's what the backpack trader stands for. It's the lifestyle you get from successful trading.
Yeah, without putting in, like when I started my career, it was on Wall Street and in 1994, and they had us working 90 hours a week. And I'm sure when you were early days, you were doing that kind of thing as well. It's like, that's no life. I mean, it's just no life. It's no life.
Well, I mean, my story is a little bit different. I probably should have lived in New York. Everyone thinks I'm from there, but really I'm a West Coaster, and I had my own business. And the business itself was kicking my ass. I mean, I was working 16, 17-hour days. I'd sleep 3 hours a night, whether I needed it or not. And, trading seemed like a way out. And it ended up being a way out. It took a little longer than I thought it would, but still, my reason for learning how to trade is similar to everyone else's. You want to be free, whatever it is. Free from your business. It gives you headaches and acid reflux. Free from your boss. It gives you even bigger headaches. free from everything, basically. You want to be able to just be free to do whatever you want. I mean, life should be that way, right? But we don't live in utopia. So learning how to trade is certainly a skill that will reward you if you truly learn it and learn it for the right reasons. And most people are trading, don't really understand why they're trading. They don't have their reason strongly implanted, firmly in place. And that then motivates them to do all the wrong things. And they wonder why they can never succeed at trading. And that's most people, because 90+% of people fail at trading. But I believe that you can simplify it, reduce it down, and really commit to your reason for trading in the first place, and then just focus on the things you can control that get you there, and stop trying to control things that you have no control over. You have to learn how to surrender. That's one of the 12 powers too, by the way. But ultimately, it's not really that hard, because you can prove it to yourself before you risk your money. And it just befuddles my imagination why so many people neglect to do that. It's one of the
like all the today, these days at least, not when you and I were starting off, but these days, all the major broker providers, whether it's Interactive Broker, TradeStation, and if you can't find it from your broker, you can find them on the internet, paper trading abilities to, like you just said, why bother putting all your money to test and at risk before you know really what you're doing and how you're doing it and why you're doing it? So those paper trading abilities are just a fantastic way to get ahead of that.
Yeah, but also I'll go a little further. I think that there's also a huge risk, because most people will play with a sim trader and they'll paper trade, but they'll do it the wrong way. And they, in essence, they reinforce things that they'd be better off not reinforcing. And so they end up in trouble. I mean, I'm a big believer that there are only 2 reasons to use a sim account, only 2. And I've yet for anybody to tell me a third reason. And I'll admit it. If you tell me a third reason and it's true, I'll go, okay, I'm going to change my tune. But there's only 2 reasons. One is you learn how to execute trades. It's not about winning and losing. It's, can you place the trades without mistake? Can you place your handles? Can you place your stop and reverses? Can you cancel your stop and reverses? Can you place trades in all types of conditions? 1 target, 2 target, 3 target, move your stops. Can you execute your trades? You can practice that until you're really good at it. That's just mechanical. Okay. The second reason is, once you've got that dialed in, is when you have a proven trade plan, one that you've researched, you've done your homework, and you know that if you can only execute it properly, it will grow your account and make you money. When you have that, can you take 25 trade plan trades in a row without a single mistake? And that's what you use a sim account for. Because what I learned as a drummer, the magic number of 25, if you could do something 25 consecutive times without a mistake, it becomes a part of you. It becomes like riding a bike. It becomes a reflex. You never have to think about it. You don't have to think when you walk. You don't have to think when you do normal things in life, when you move your body certain ways to do things. You just do it naturally. And you want your trading to be like that. And if you can get trading your trade plan to that level too, then you've reached it. You've achieved what you need to achieve to succeed. And so you use your sim account to hone in those 2 skills. If you do anything beyond that, you're probably hurting yourself. Most people don't treat their sim account with respect and reverence. They treat it as a sim account. It's fake money. Who cares? But the problem is that you're reinforcing. I learned something, my old a friend of mine who I grew up with playing drums with, he's an amazing drummer. And he said something to me that affected me early on in life. And I've applied this idea to everything, especially my trading. And it's this idea that you want to practice how you intend to play. If you practice like a wimp, you're going to play like a wimp. If you practice hard, you're going to play hard. So what do you think happens when people use a sim account the wrong way? How do you think that affects their real life trading? I mean, think about it. Be honest. I'm not talking to you, Romulus. I'm talking to everyone in the room. Think about that. Practice how you intend to play, and don't mess around with trading. It's just too important to get right. What it can do for you in your life, don't get it wrong. That's a big mistake.
So a couple things you mentioned along the way here, Troy, was not trying to be a hero. One of the things I reinforce to everybody is I prefer not to trade on battlefields. And I have never been in the military. Fortunate to never have been in any type of, real violent altercation or situation in my life, but I imagine what it would be like. It'd be terrible. And I imagine that most battlefields are left with not too many winners. Most people coming off those, and if you talk to people in the military, they'll tell you this, that they're messed up for life, or they're injured physically, or their friends are dead. That's not the place we want to be. We want to turn this into just a regular job that we really enjoy doing, and we enjoy the benefits from that job.
Oh, totally. I mean, I often say, and maybe even you read it in my book, I don't even remember, I'm pretty sure I've said it over the years, trading is war. It really is. There's you and there's the other person, someone else who's on the other side of your trade.
Right.
Someone's going to win, someone's going to lose. Maybe there'll be a truce at times, the break even. But you want to be on the winning side of that battle as often as you can. And then you want to get off the battlefield as quickly as you can and minimize your exposure to the market, which is why I was drawn to the active fast strike, because that fits right within my style. And that's also why the power of quitting is so powerful. You hit your goals, you take your money, you leave, you're done. It doesn't mean you can't trade more. There's a way to do both. You could always just do another trade plan with the same principles. Each trade plan dances to the beat of its own rhythm, its own drummer, and it has its own cadence. And then you can get diversification like that too. But a trade plan should be very specific. You know when you're going to get in, when you're going to trade, what you're going to trade, when you get in, what your goals are, and when you achieve them, you're out and you're done. That's it. And then rinse, repeat. And like this, you can, probably, again, get kicked in the shins, but not lose your legs, and you grow your account like that.
You grow your account like that. So on a different, slightly different tack, because everybody, I'm sure, is getting a lot of value from all the lessons that you're just talking about that we repeat all the time. And we have to repeat them. We have to tell them to ourselves. We have to meditate upon them. We've got to think about them and then execute on them. But just on a slightly different note, what are some of the things that you love trading? Because you have a fairly diverse ability and a skill set. I mean, you talked about currency, which has got what got you started, the famous George Soros shorting the British pound story from the early 90s. You developed into some things with net picks, but there's a lot of things out there that we can trade. There's a lot of things that you have the ability to trade. But what are some of your favorite, I guess, assets or styles or securities that you enjoy trading the most?
Well, one of my favorites, believe it or not, is some of the Forex daily charts that we use with our Forex alert service, because it just wins so much and it's so easy. I like things that take very little time, and this takes a few minutes a day at the most. And so that's some of my favorite trading. And then I use advanced tools like FX Synergy so that the whole trade is placed, the targets, the stop. It even knows what percentage to put on and what percentage to take off at each target, and even when to move the stop to break even. And that's a great way to trade. I really enjoy that because it's simple and takes up no time.
So if I could jump in real quick, you're talking about things like dollar yen, dollar Swiss, dollar euro, right?
Yeah, ironically, not a lot of dollar pairs. A lot of them are yen pairs and pound, like pound Aussie, pound euro.
Okay.
The Swiss, there's some dollar pairs, but ironically, those aren't the ones that are really the ones that are consistent with this strategy. But yes, like that.
Okay.
And then for day trading, I mean, day trading is the way I trade is not really, it's hard for me to teach others. So I came up with strategies that I learned. One thing I learned with NetPicks is how to create something that can be taught, learned, and then duplicated by others.
Right.
And so a lot of my strategies are designed to have trade plans as part of the strategy. And so I practice what I preach and trade in that style. Like I put on our trade hacking club this morning, this morning's e-mini session for crude oil. It took 2 minutes, and it's using my Spotlight Master Suite strategy, which has been around for years now. And I love that strategy. I developed it in Costa Rica, actually, when I was with my family on vacation, and it turned into the Spotlight Master Suite. Well, it was Spotlight Power Trader, then became Master Suite as it became more powerful and got more things added to it. But that's a style that I really love, and it works on a lot of different markets. But crude oil is a good one, especially we all know what's happening with crude right now.
Here, I've got a chart. This is the crude oil futures right here in front of us now.
Yeah, so I use a momentum bar. I use a bar that's every bar is the same size, and it's based on price action, because my strategies are very dynamic.
So it would be like a high ashy type of bar? Or?
Let's see. It's a range bar.
All right. I can just kind of do a little bit of this. I know that
put
there's no detail here, but just to give someone a general idea, let it pull up here.
I'm using an 8-tick range bar, 0.08 or 8 ticks or whatever, and it's a candlestick chart. So that one looks really small. That's too small. You want to make an 8-tick size bar. Those bars look like 1 tick.
Right.
Yeah.
Can you actually? I don't know. Maybe on TradingView you can't actually adjust the ranges in here.
Where up there it says 1R, maybe you could change that to an 8R. Try that. Up in the upper, up. You see up above where it says 1R.
Yeah.
I don't use TradingView, so yeah, maybe you could change that to. It says 1 range. See where it says, yeah. Try the 10. Do the 10. That'll be close.
10
down at the bottom where it says 10 range. Try that one.
All right.
All right, and then if you can make it a candlestick.
Okay.
I mean, there's no way to really show.
I went back. It went away from the range when you moved.
Yeah.
So.
Yeah, I don't know. I don't use TradingView, so I can't really help you there.
That's okay. I was just giving it a shot.
You could grab a screenshot off the Trade Hacking Club Discord. I put it up there earlier this morning if you want to show it.
Okay, so while you're doing that, so you like the crude oil that obviously treated you well today. There it is. So I'm going to bring that up to everybody real quick here. I'm going to show everybody what he was talking about. Hang on here.
I'm sad to say I didn't trade it today. Today's my wife's birthday, and I won't tell you anything else.
No, I get it. So, all right, see everybody, you see in the middle there? I know it's a little bit of a there. I blew it up a little more.
Yeah, there you go. So that shows the morning trade. It starts at 9 a.m. The first one went long. It got far enough to break even. The blue one, we were going for that first target. It barely missed, and so the stop moved up, and then it came off and stopped out at break even. And then there was a short trade, and you could see it hitting all three of the 4 targets. That third target.
I'm gonna break in just briefly. You see where those 2 green arrows are, everybody? Triggering into that red candle right there below this base. You see that?
The yellow plus signs were the entry.
Yeah, so you see here, and then that breaks down. So he's shorting, and then it's breaking down, which is obviously what you want because you're short and you want it to go down.
Right.
So that's what happened.
And the reason why it's called Spotlight is because it identifies patterns that give you a high probability outcome. And that's what we want as traders, right? If you have a setup that happens and the outcome of that pattern is highly predictable, that's like having a crystal ball. That's the best that you could ask for as a trader. And so it spotlights those patterns based on the strategy. And then when you get short, all the bars turn red. And when you're flat, the bars are gray. And when you're long, the bars turn green. And then that helps you psychologically, because sometimes the trade takes time to develop. It might move against you at first, and you're wondering what you should do. And well, you follow the rules basically. But when the bars are red, you don't do anything. You just stay short.
Right.
And that really helps.
Let the trade play out, like you said. That's what it's supposed to do.
So the idea is when you get 90% of the way to that first target, the stop is going to move down and lock in 1 tick so that you cover your costs. That's that yellow line that's trailing down, but you can see it above the trade before. Like if you go back to before the trade triggered in, you can see the stop above, the yellow dots above.
Yeah, right here. Yep.
No, above. Above that, you'll see the stop. It's
here. Yep.
Yeah. So the stop is there. And then the targets are a multiple of that distance between the stop and the entry. So targets 2, 3, and 4, you're getting better than 1-to-1 R to R's.
And
anyway,
by the way, this is what he means there, risk reward, in case anyone.
Risk reward ratio. Yeah. Without trying to explain the whole strategy, it's very visual and really simple. And it's the same, and it's adjusting to market conditions. So the size of that yellow short trade is much larger than the size of the prior blue long trade. The prior blue long trade required a smaller trade, and you can see it missed its first target by just 1 tick. It's pretty darn accurate. That was the blue trade that came right before with the BE. Yeah, so that one broke even. But the goal was reached on the second trade, and then guess what? what do you think happened? I was empowered to quit, or I would have been. I didn't take this trade because I slept in this morning. But ultimately, the power of quitting means you're empowered to quit trading, and then you come back and do it again tomorrow.
Yeah, because there's always these markets, everybody, by the way, who hasn't traded futures, currencies, commodities, those types of products, and I know many of you have, but many of you haven't, those markets are open a lot more often, a lot more trading hours than just standard 9:30 a.m., 4 p.m. stock market time, New York, okay? They're open, 24 hours in some cases, except for weekends. It's more like a cryptocurrency kind of thing, but there's high liquidity at 2 in the morning on a Tuesday or 6 p.m. on a Wednesday kind of thing. And if you can't stay up for 24 hours and constantly think that you have to capture every trade, you've got to have discipline, like Troy just said, to do your thing and then go do your thing, which is get to the beach or go be with the family, celebrate your wife's birthday. Anything else that's fun besides forcing trades that aren't part of your plan.
Right. And to take that step further, that plan that you're just looking at actually needs you to quit when you hit your goals, because that is part of the proving it process. If you're just going to trade whenever, then you don't have anything that you can get measurable results for, and you can't prove it to yourself. There's a randomness to it. Now you got lady luck that becomes part of the recipe, and that's never good. You want to get her out of the recipe.
Right.
So if you have your quitting goals and you know that the goal says, okay, you hit your primary target and you have a positive result and you do it within 1 to 3 trades, maybe 4 at the most, and then you're done. Then you have something you can go back, look at the last 100, 120 sessions and prove that you can quit your trading session with a positive result a vast majority of the time. And in so doing, you're also controlling your drawdown with minimal and efficient trading. So then you're eliminating expenses, you're eliminating the risk of mistakes and fatigue and losing your attention. No one has an attention span greater than 2 minutes these days anyway. It's the modern world we live in. All those things are risks that will take away your treasure. So I'm going
to throw in another risk too, that this is something I preach a lot about when it comes to individual stock trading, which is something I don't do often because of this. You can have the greatest trade plan. I'm trading all these tech stocks. I mean, look, I don't know about you, but I noticed that tech stocks got very popular in the past 10 years until recently. And Facebook was one of them. And here it is, that stock gaps down 27% after the earnings come out. You could have all the stop losses in the world, but you didn't get kicked out of any of these price points. You got kicked out at the bottom right there. And that's not happening when you're doing these futures trading and you're sticking to your trade plan. That kind of thing doesn't come up. Right.
And of course, you have other ways to protect yourself from that. And maybe that's not holding a position through earnings. But even so, you can still, gaps are a risk with all trading. It's just that they're a lot more rare with markets that just continually trade all the time versus, they stop and then start the next morning. So, that's a very real risk for sure. But
the cattle futures up here right now, I don't know if any of you people, your guys or you even have traded like cattle's hogs and those kind of direct commodity futures in your plans or your experience.
Soybeans.
Okay, so here's the soybean. Now, a couple of months ago, Troy, you and I put out to our respective groups a couple of exchange traded funds that were directly related to the commodity exposure. And this was before they blew up, before the war broke out. So this was one of them, by the way. This was one of the things that we talked about. Corn, that was another one. These two. And all of these things just blew up about 2 weeks after we brought them out to everybody. They just exploded. And these are the things, these are ETFs, but these are the futures that you guys can trade with the Spotlight and Counterpunch and those types of applied systems.
Yeah, we have a Counterpunch trade plan for soybean futures that we do in the trade room. It's been going for years. I mean, it's probably 8 years old. Haven't changed a thing on it. And it usually is finished within the first few minutes. So we, yesterday when I was doing the trade room, I showed it and it hit its goals and it took a little longer. I think it took like 7 minutes. But imagine your workday taking a few minutes, you hit your goals and you're done. And then as you grow your account, when it's time, you give yourself a raise, you move your finger from the 1 to the 2 or the 2 to the 3. And John Lizar's with us. He's putting in some messages. If you see in the chat, John has been a long-time student of mine for years and years. He's had a lot of all my stuff. He is hosting the trade room for me now on Tuesdays and Thursdays. In fact, he's our Ninja Trader guru. I use TradeStation. He uses Ninja Trader. And John probably knows my stuff better than I do in many respects.
Yeah.
And so he is the host of the Backpack Trader Trade Room. We stream it live on YouTube Mondays through Thursdays.
And he's also on just a different tack. He's also one of the newest members of Club Romulus with ACTA. So we welcome him.
ACTA, that's right.
Welcome him for that, because this is it. We're joining forces. We're coming together, and it's going to be a better world for all of us because of it. And you can just get an idea, everybody, about the different things you can trade, the different ways you can trade them. But you notice there's a commonality to all the things that I preach and write about all the time, to what Troy was just talking about for the last 20 minutes, which is walking away from trade, which is sticking with your plan and your system. You know, a couple weeks ago, Troy, I had a trade on with ACTA. This is before I think a lot of you people were joining in the group, but I had a trade on with ACTA that was short the energy stocks, not oil itself, but it was short the energy stocks, okay? Because this was after the big run, and I saw a blow-off move type of an overbought situation. And there were some people in there who thought, well, why are we doing this? Why are we in this trade? Again, I'm following the system. I'm following the method. I'm sticking with the plan. And lo and behold, it made money.
Absolutely. You got your plan. You know your plan. Your plan wins a lot. When you have it, here's another thing. Be very careful not to change it, because you know this. I'm talking to everyone else, but it's really easy to break a winning plan. Sometimes the winning plan is just, it's perfect. Doesn't win all the time, but it doesn't have to. It wins enough to grow your account. It's perfect. Once you mess with it and try to improve it, you end up breaking it and ruining it. So it's really important to just have a lot of reverence and respect for a trade plan that works. You don't have to fix it if it ain't broke. And
well, what happens, you know this, people experience a drawdown, which I call banana trades, and I can explain those another time, but people experience a drawdown, and then they start, and this is just human nature. They start to go into the mindset of, oh, I'm not doing something right. You know, I got to fix it. Like you said, no, you just have to understand that nothing is 100%. Nothing moves in a straight line forever. There's always corrections and mean reversions and all of those things about humanity that reflect in the markets, because these markets are nothing more than the mirror of us.
Right.
It's just our money. That's all.
Yeah, it's a collective wisdom of everyone that it just seems to have it knows a lot more than any one individual person. That's for sure.
Absolutely. I call that the power of markets. It's something that I believe in. I don't have the personal ability to outsmart, all those people together. Don't try to. I'll let them do the thinking for me. It makes my life a lot easier and gives me more time to do the things that I want to do. And, back when I was starting off, it was 90-hour work weeks. And I know people today in the business, years later, they're still pulling those kind of hours. I thought, well, why? What do you have to show for it beside your hair is much more gray and thinner than it should be? Your health is deteriorated. Troy, there was two guys that I worked for. One guy back when I started in 94, I found out he hung himself in his garage 2 years ago. And it was because of the eventual stresses of the market that caught up with him. And another guy, he passed away a while ago, but by the time he was 64, he had 3 open heart surgeries. The stresses of the market just got to them. We can't have that for our people. And you can avoid it all by doing everything that Troy's just telling you to do right now.
Yeah, go back to the primary thing I said earlier, and that's knowing why you're trading in the first place. And I guarantee you those two things that got those two people, those weren't reasons to trade. They were trading for the wrong reasons.
Yeah. Yeah, wrong reasons. So, yeah, it's a great level of freedom. It's a lot of fun. I always have a great time with everybody out there in the ACTA world. And again, this combination is going to be powerful, everybody. We're going to be showing up on the Backpack Trader YouTube site on several occasions during the weekdays, and I'll start to show you and bring the links to that over probably next week. And then Troy and I will have a lot more conversations together over time. So I want to thank you, Troy, for coming on board today, joining us. And really, again, on the behalf of all of the legions in Club Romulus, I'm just so grateful for your open arms and you're willing to open your door to us and help us find a home that I feel is going to be befitting of what we can contribute to the community over time.
Yeah, I'm really happy that you've decided to join us too, Romulus. So this is going to be a lot of fun. I'm really excited going forward. Got some new things to be sharing with people in the near future. Just if I can quickly plug my new book, Forex Quick Start Guide, just came out last week, actually.
Yeah.
So I'm really excited because my first book, The Day Trading Quick Start Guide, has been a bestseller on Amazon, which is beyond my wildest dreams that was even possible.
Yeah.
But
a lot of my guys, they already read the book. They already read it.
That's cool.
I know.
Appreciate it.
I mean, we put it out one little thing and several of them bought it immediately. And then 5-6 days later, I started getting messages from all over the world. Hey, I read Troy's book and you're right. That guy knows what he's doing. He seems like a good fit for, what we're doing over here. So, and that's another thing about it. Troy and I have, experience, skills, and abilities, but they come from slightly different parts of the market, angles into the market. And that's why this combination is going to be just an absolute fantastic endeavor for the next several decades. I'm excited. He's excited about it. And we're looking forward to a lot of great work to come. So with that, then we don't have a ton of time because usually, Troy, we do this from 4 to 5 and you've got some of your backpackers that have joined us, and I don't want to, pull into too much of their free time, and nor yours, because you've got a celebration with your lovely wife that you need to get back to. But I'm just going to do a quick normal review like I do on Thursday nights for a few minutes here, which is, again, we covered the indexes, sectors, all 11 of the sectors, a couple of groups, individual stocks. We'll get to a couple of questions, not the normal amount, and then next week, right back to it. So S&P 500, everybody's seeing what I see, which is this rebound in place in here. And if you've been reading the morning reports, which if you haven't, then you should, because this was noted many, many times in there, that short-term positive divergence in the short-term indicators and also the RSI, the 14, which is more of an intermediate, longer-term person in place there. They were starting to positively diverge. This can be seen a little better when you move it to a line chart and you see the closes as opposed to those big stab downs on the 24th and 25th of January and the 24th of February. You can see the lower closes in here, but the slightly improving nature of the short-term indicators and the intermediate term. Okay, that's all what was really setting the stage for what we've seen the last couple of days in here, which is this pretty decent rebound. Now also the S&P has done a couple other things, closed above this swing high in here. And let's see, didn't quite break it on an intraday, but it closed above it on a closing. So that swing high has been taken out, plus the 21-day and that down moving average right there. So a couple of things and a reason to think that the rally, as I've been mentioning, could have a couple of weeks overall into it and maybe even a couple of months. Remember, everybody, this is one of the key trading aspects that I can give right now. Cyclicality, seasonality is very important, at least to know where you are. Well, the month of April is coming up. The month of April is the strongest on the bull side of the equity market. Everybody thinks it's November, but April beats it by 2 basis points. So obviously we can call that a draw, but technically speaking, April is stronger. So the big money players are preparing for that. They're getting ready for something like that. What they don't see are some of the longer term stuff that we've been highlighting again and again around here, and we're not done highlighting them. So you see things like this and so on. But let me come back to the S&P. There we go. The fact is that we do have a rally in place over here. And that's why over the last several weeks, ACTA has been picking up on the long side of the trading. We've finally picked up a short trade this afternoon after this rally. But you may have noticed that we've been looking more at the long side for weeks now, and we've been profiting from the long side for weeks. This isn't just an observation or an academic discussion. This is actual execution of trades. We've been winning on the long side lately, whereas a lot of other people were thinking the markets were going to get smashed. Of course, the herd and the retail crowd, they tend to change directions and mood very, very fast. They're typically always, behind the times, behind the trades. Unlike us, we're in front of the trades, which is nice. How much higher can it go? Well, you do have resistance right here. Also at that falling 50-day moving average, the 200 is a little above there. Then you've got that resistance line, which was a former support area for a bit. That's not too far. All these resistance areas, this confluence, as one of our Centurions like to say, or groupings, as other people have labeled it, that's all coming up not too far from here price-wise. So keep a close eye. Don't get complacent in here, okay? Keep a close eye. Plus, now after 3 up days, we're also getting a volume decrease pretty quick. And that's not what you want to see when you start to see a rally going in place. I mean, you can look at the ETFs. Their volume is dropping. Triple Q's way up over the last couple of trading days. Volume disappearing already. Russell 2000, volume disappearing already. I understand it's quadruple witching tomorrow. The third Friday of March is tomorrow, and that will create a lot of volume, and maybe people are preparing for that. But nevertheless, you don't want to see volume drying up this fast into a rally unless you've had that capitulation, unless you've had that selling climax. And you know that in my professional opinion and in my analysis that I have been studying and going through, I haven't seen that capitulation of that selling climax. And that's something that my one-on-one coaching students and I have been discussing at length lately, is digging into the details of those selling climaxes beyond the scope of this conversation as to how we properly identify those. But we haven't identified it yet, okay? It hasn't taken place yet, and that's critically important. So without that selling climax, without that capitulation level low, you do need volume coming into these rallies, PDQ, pretty darn quick, okay? Pretty darn quick. Hasn't quite taken place yet. So that is what's coming here. Resistance areas not too far above current levels. Keep an eye, okay? Just because this downtrend line has been broken doesn't mean that the rally is going to begin a sustainably strong upside move. You saw that it broke the downside a couple of times, and that didn't mean that the downside was the market was about to fall out of bed. As a matter of fact, it didn't. It rebounded and set inside of a kind of a trading range over here. Dow Jones looks pretty similar. It's had a little bit of a better bounce. And those of you who were paying attention to Discord last Friday at about 3:45 p.m., this was on both sites, the former Rock site and the new, or at least new to us, the Backpacker site. I put out details about my 4-week Dow trade, and I was talking about buying DDM for that. That was a home run out of the park trade, everybody. Home run out of the park trade. Out of the park. That was a grand slam right there. Okay, grand slam. So congratulations, because I know I've heard from a lot of you that were paying attention to Discord that hour and took that trade and have been managing it well. So good job, everybody there. All right, the Nasdaq, up again, of course, like everything else. This has been one of the weaker areas, tech stocks in particular. Okay, XLK is a representative of that. This is one of the weaker areas of the stock market going back the last, year to date and a few months prior. It's rebounding. I don't really have a lot of faith in something like this for the intermediate term, again, without that capitulation style low. Okay, it doesn't mean it can't rally further. It can, but you see resistance areas not too far above current levels across the board in just about everything. Okay, Russell 2000, let's take a bigger picture look at this one, and I'll bring that down a little bit here so we can get that a little more in camera. All right, there we go. This is the IWM, the Russell 2000, trading back for the last year plus. And this is that long trading range that it was in, and it broke down from there, really with strength and hatred back in the middle of January, fell, and now it's in this new trading range over here, okay? If by any luck, stroke of Irish luck, that these green bars, hey, you see the way I use the word green? Anyway, gets back into this trading range, I would say that it's going to be another heavy hit to the downside, if it even gets up there. I don't know if it does. Probably just the underside of this trading range, which after the move it's put on is not too much farther than where it currently is. All right, so what about the foreigners? Let's look at Germany. This is still bear market behavior. Let me expand that so we can see a little bit better there. Bear market behavior. Don't see anything positive in something like this. And Japan, nothing there as well. As you know, I was bullish on Brazil way back here in the middle of January. And then after it's hitting up its 200-day moving average, this one is no longer really looking all that positive. Okay, we took a winning trade out of this one here this week. Acta did a nice winning trade actually, but we were in and out of it. I'm talking about intermediate term. It's running into trouble. The rally is clearly slow. The momentum has clearly taken a different tack, and so you want to be cautious with this one as well. Well, this was the big story yesterday, wasn't it? China, FXI going up 21%. When I say FXI, I'm talking about their equivalent of the Dow Jones. So can you imagine the Dow Jones going up 20% in a single day? That's never happened before. In the history of the Dow, it's never gone up 20% in a single day. That happened to their Dow Jones, to their broad stock market yesterday. Of course, their market had been pummeled and beat up and annihilated over the last year plus, about 13 months or so. So very overdue. And after the temporary perhaps short-term fears were removed about many of the Chinese stocks being delisted, and the Chinese government saying a couple of positive things, such as that they're no longer going to be attacking their own tech stocks, that they will hopefully be a force of positive peace in the war, among some other things that they've said. That sparked a crazy pop to the upside. However, still a lot of downward pressure could be coming if this goes up just a little bit more. Okay, you see all the resistance up in here. There's going to be a lot of people who see this price going up and are going to be willing to sell. I mean, look at today. It fell back right away after that huge one-day pop. Okay, so a lot of caution out there still to these foreign companies and their equivalent indexes. Okay, real quick, the 11 sectors that we have. This is consumer. So the three weakest sectors in the market over the last couple of months: technology, we already reviewed that. Here's consumer discretionary, and communications are the three weakest. And what did I say earlier this year? I said this at the beginning of the year, everybody. I said watch all three of these because they're just overall, over the course of the year, they're going to be the weakest three sectors. They're just going to stay that way. Now, they could change day to day and week to week, but overall, and generally speaking, over the course of the year, they're going to be. So what do we do with something like that? Well, we can hit them, okay? You can short these guys on rallies, and that's what we're doing right here with biotech, by the way, with today's trade. But similar idea. That's that one. Here's healthcare. Healthcare is taking a little bit of a different note. I'm not talking about biotech healthcare. I'm talking about the big guys. So look at Lilly up 3.2% right now. Johnson & Johnson, after a pullback yesterday, answering the call again. There's a change of tone. It seems like the traders and investors of the world shook off the COVID-related businesses that these guys were involved in, and now it's back to, healthcare, the big pharma. Yeah, that's a safety trade. We forgot that it was a safety trade because we got so wrapped up last year and the year before in the COVID trade. But we remember now these are safety trades. So in times of turmoil, which 2022 will be for the year, well, this is a place to go. That's probably why they're benefiting. So this is a little bit of a different personality trait inside of healthcare. Financials, as you know, I kind of gave up on these months ago, and I gave my reasons, and that has been proven to be right on because these just got really destroyed. Rally here. I don't know if it's a good short candidate, but it certainly isn't going to be a long candidate, not for a while. And by the way, with financials, let's talk about that. So people are asking why the financials have got hit so bad with the interest rate environment going up. Well, because the banks borrow at the short end, okay, and they lend at the long end. And for a long time, they had the ability to borrow cheap and lend at a little higher rate, and their margins were fat. But now the spread between the short end and the long end has narrowed. It has decreased, all right, which means that their margins are decreasing. And that's why the bank stocks are getting hit. Plus, there's that fear that Russia is always lurking in the background with these massive cyber attacks that they're always planning and talking about, which, of course, could be a reality. So continued caution in there. Nothing going on in XLI that looks any different than the Dow Jones itself. Here's XLE. Oil, energy stocks have been the belle of the ball lately. And let me get rid of some of this stuff here just to clear it up. And there is a lot of potential here for the rest of the year, but they probably still need a bit of a break over the short or possibly intermediate term. Here's one of the other major dogs of the stock market, the communications. Let this one rally a bit, bring it up a little bit, and then this is going to be ripe for hitting, okay? Ripe for hitting. Here's the transportation index. Nice rebound there yesterday, 4%. A little follow through today, and let's look at a couple of individual stocks on there in a moment. And basic materials looks a lot like the other guys. Here's consumer staples. Consumer staples was an area that was picking up over here when the inflation talk was just warming up and getting started. Of course, I brought that to you in the middle of August, right before Jackson Hole. That's how I remember it. And my thoughts back then was that Powell and the Fed were behind the curve, and that transitory was going to be put onto the trash heap of history where it belongs, along with anything else that guy says, by the way. That's where it belongs. Lately it is, don't worry, there's very little risk of a recession. He said that yesterday. So what does that mean, everybody? We should be preparing for a recession. No doubt about it. Those guys aren't right. Those Fed guys aren't right. Anyway, this trade really fell apart, though, recently. And a lot of that had to do with a lot of these companies losing business in Russia, although that could be something that's more of a hype situation than anything else. And then utilities. This is the last of the 11 sectors. There it is. This is holding up. People are asking, well, why is this utility sector doing well in the face of higher interest rates? That's because what do they sell in addition to power? They sell natural gas. And natural gas prices are up because of the energy run, so they're benefiting from a little bit higher margin there as well. All right, and as I mentioned, a couple of individual stocks inside of the consumer staple. You see Procter Gamble, this one really took off, broke out authoritatively here in early December with some rise in volume, but then it couldn't hold, and this is a breakdown. So if Procter Gamble were ever able to rally back into the high 150s, I would say if you're in it, that would be the way to get out of it, because this is a top right here. Okay, that's a topping pattern. That's a definitive topping pattern, actually. Okay, so that is that stock. Amazon, one of the bigger news and events of late last week, I think, with their announced stock split. Stock gets a little bit of a run here again with just the rally of the market. But as I put in the report, warning, overhead resistance is larger than it appears, and it's going to be coming, here and for several days and weeks. There's a lot of resistance coming in here, okay? Again, without that selling climax, without that cathartic selling, you didn't cleanse them out. You just temporarily wrung the towel a bit, okay? You temporarily wrung it out. That's why there's still caution out there for this stuff. Let's be careful. Let's remember that the Nasdaq 100, represented by the Qs, back in March 2001, after it had been down over half, it got cut down over half. It was probably been down about 60% at that time from its year high levels, and then it jumped 51% in 2.5 months. But that March wasn't the low. It breaks that low post-COVID post 9/11 reopening, goes to a new low. Then it jumps 54% in 2 months. 54%. And by the way, that post 9/11 low wasn't the low. Over a year later, it had dropped another 25% below that low. So you just want to remember how crazy this stuff can be. While the VIX has pulled back the last couple of days, just the fact that it was parked up here in the low and mid 30s for so long, that's the idea. And while we could have peace in Ukraine and Russia, I doubt it, but we could. And markets will continue to rally based on that for a few weeks, maybe a few months, like what happened in 01. But the ultimate lows have probably not been seen. And that's probably one of the more important lessons that we can take away from all of this. All right. Any more individual stocks? So get your questions in there, everybody. We've got just a few minutes. We'll cover some of them. As I mentioned, because of our great conversation with our host, Troy, and I say our host of our new home, that we were talking about a few different things. But next week, of course, coming back to it. And as usual, the session is being recorded and will be sent out to you tonight when I get back from my church meeting. And speaking of my church meeting, by the way, I am still doing those less than lovable ice cold showers. That's right. But there is a silver lining to all of this. Coming out of the cold shower, where I live at least, I'm walking into an outdoor environment where it's 45 and 50 degrees instead of 4 or 5 degrees. And that makes it a whole lot better, a whole lot more tolerable. And I don't have too much more time left. This goes to Easter. So Easter Sunday morning, I will take a hot shower. I will shave, clean myself up, and prepare myself for that important day. So as we said, we have questions up here from Mike. Does the yield curve inversion predict any future recessions? If so, how early of an indicator is it? Mike, that is really a well thought out question. And yes, it does have a good track record of predicting recession. So we're talking about the yield curve here with the 2-year. And let me blow that up a little bit here just so we can see it a little better. There you go. So this is the 2-year yield at 1.92% just the other day. It got to 2%. By the way, that's the high. And the other major bond yield that everyone looks at is the 10-year. So it's the 2-year and the 10-year, but that's what everyone's looking at. They have the distance between the two has narrowed greatly over the last couple of months. That is called a flattening of the yield curve. An inversion is actually when the 2-year, then the yield is higher than the 10-year. Doesn't happen often, but it does. As a matter of fact, one of the more notable times that this happened was 81 when Paul Volcker was 81 when Paul Volcker was the Federal Reserve Chairman and he was raising interest rates. Not only was the 2-year above the 10, but the Fed funds rate was above 10. Okay, that's incredible. The Fed funds rate today is a quarter. They raised it from 0 to a quarter yesterday. So it's at 25 basis points or a quarter. It would have to get above 2.18% to top the 10-year, which obviously is not going to be happening anytime real soon. So yes, a yield curve inversion does have an ability and a good track record of predicting recessions. It typically is, it's up to a year lead time, up to a year. Okay, it's not like I would say up to a year. It could be 3 months, so 3 to 12 months. The last time it happened, by the way, was late February 2019, exactly 1 year before the COVID recession. So it works. It works. We're going to keep watching that. Okay. Are most of the trades long options or short sells? Yeah, so it depends on what you're talking about. ACTA. ACTA is either, long or short in ETFs, by the way. So we don't use individual stocks in ACTA. We use ETFs, exchange-traded funds. We're going long or short. And we do use options. I haven't used them lately because of the VIX. When the VIX is elevated like this, it makes the options market squirrely and a little less predictable. So I don't have as much ability to maneuver around within ACTA as I do but it fades back a bit and that creates more opportunities. Yes. And by the way, anyone trading ACTA, and people do this all the time, they look at the trade alert. Like, let's say if I'm just going to go long the Qs or something, like maybe a week ago, we traded, not the Qs, but we were buying some other things long. So we're going to go long the Qs. People look at the Q options and they might buy an option, a call option. What I would suggest, just use a smaller dollar amount than what you see me using and use a long enough expiration. Don't expire next week. Look for something in May at this point. So actually the third Friday of April will be fine. You push into next week, then you want to go into May. Just give yourself a couple of months. Yes, you sacrifice some upside, but in my opinion, that's well worth it for the safety factor. And also you have plenty of opportunity to make money in there. Okay. Plenty of opportunity. So, yeah, that's another good explanation too. All right. What does LQD? LQD, which is investment grade bonds. And again, it's showing you that, well, first of all, interest rates go up a lot and this will go down because this is the price of bonds. TLT, LQD, IEF, all those are the prices of the bonds themselves, which move inversely to the interest rate. So if interest rates go higher, then all those ETFs are going to go lower. That's number one. And yes, it is showing that people are losing a little bit of faith in the large cap blue chip style stocks. There's no question that that's what it's saying. Okay. No doubt about it. I mean, you look at HYG, which is junk bonds, and these guys just really fell out of bed over here and got crushed. Rally with the market. Okay. Very correlated to the market over here. Very correlated. So good pickup there, Mike. Yes, it does correlate to the health of but it's the big cap stocks. Okay. Big cap. All right. That's great. Everybody, thank you so much. This was an awesome run as always. I'm grateful for the opportunity. I know Troy is also. You guys are awesome. Let's do it again next Thursday. The recording will be sent out. Another morning report tomorrow. In the meantime, please be careful. Remember, safety first. And when the market bell rings tomorrow, let's get to it. You guys have an awesome night. See you soon.